Okay, I'd like to welcome everyone to the Hurley Investments Trade Finding or Adjustments for Thursday, the 14th of February, 2019. We've got a good sized group again. We've got about 14 in here. I'm going to show you a couple things that I worry about in my own portfolio and how I'm trying to make a decision on adjustments. So today I'm going to go over an Under Armour bull put adjustment from my collar trade. I'm also going to go over an NVIDIA shot in the dark trade that'll have little to no adjustments available. So here we go. Understanding the market. What happened today? Video. You guys cannot see the video. Let's share a screen. Thank you. That's funny. I'm going on there, and I've got 4 of you that said, show me the screen, Hurley. All right, perfect. I'm going to have you guys hold on for 1 quick second, please. Okay, I'm back. Here we go. So, what happened today? What was the announcement today that affected our markets today? That the markets should have known and acted really ridiculous to you, right? Daily headlines like China deal extended 60 more days due to good progress. It should have been a positive, but we sold on it. Retail, I can't spell. Retail sales down for December. I might come back and say on that one, duh, 1.4 million without paychecks. And most of us bought Christmas early this year. There were some great Black Friday sales this year. Ridiculous. So why is this uncertain? I don't understand. I really don't get it. We also could throw in here options monthly expiration this Friday. Weekly Monday. Stock market closed for President's Day. So what's going to happen on Friday if our stock market's closed on Monday and people normally don't like hanging around over a 3-day weekend where they can't protect, they don't want to be in positions? What's going to happen? What's going to happen? There you go. Lance, I'm glad I can count on Lance. Lance, I don't think there's anything you don't come to and attend. You're right. Probably expect, due to this weekly event that happens next week, expect a larger than normal. Now, I don't know what you're going to call normal. Sell-off Friday afternoon. The reason why I say it might be a sell-off is because not only do you have your monthly expiration, I don't know if it's quadruple witching or what, but I do know people won't want to stay in over a 3-day weekend. I know that people are not too, how do I say it? There hasn't been enough growth that you need. Well, that's not true. In fact, let me go point out why I'm contradicting myself. If you take a look at where options expired, we actually do have a bit of a run. We have a bit of a run here that could, for all intents and purposes, that could cause some short covering, and maybe we have a spike on Friday. Kind of look at all this uncertainty, right? Look at all this uncertainty here. Uncertainty going left and right. We're now up to 16. Ida said she can't hear me. How's the sound coming? Is the sound still okay for everyone? Let me know if you can still hear me, because I'm still, all right, still good. Ida, that might be on your side. Good. All right. So we might have some short covering to look for or to be worried about into Friday's expiration. And then when you go to monthly, right? Oh, excuse me. Weekly also 0, 2, 15. You know what? I got to go back to headlines. This is out of the next week. We also have will Trump sign the deal for the wall and government funding? Things to wonder about, right? Monthly, looking at a month or more in time. We already talked about it, but it is the China deal. When I think monthly of something that could occur or something I'd be worried about, I would look at the end of earnings, the end of earnings season. I would also be worried about an executive order to fund the wall. So those are some of the risks we have out there. You could also stick in here some global risks. Kind of funny to say a China slowdown when they did so good on their numbers. We still have Brexit to worry about. And other than that, for the most part, I don't see anything that's out there that makes me worry. So last Tuesday, I brought in an adjustment to dangling long puts that I had on Under Armour. Might as well stick in here my position that I put. So here it is. Working my numbers. I had a 2050 long put to protect stock ownership, which at this time is stock ownership right this moment is I should just do it instead of looking on it where you guys can't see. Under Armour, which is up 12 pennies. Man, what a wild ride this has been. This has been down as much as 21.50. So it's been down about 30 cents to where it was this morning. Pretty amazing where it sits at. Probably need to move this out of the way so it won't show up. So here I am on an Under Armour position that right now is trading at 20 high, low, last 21.90, right? 21.90. Currently trades at 21.90. So if I was protecting at 20.50, how am I doing? How am I doing if I was protecting at 20.50? How am I doing if I'm protected at 20.50? Am I doing okay? Am I doing okay? What do you think? No comment, huh? Well, I could say that the stock, right, is up $1.40. Stock is up $1.40. So the question is, how much should I pay for those long puts? It looks like I paid 47 cents maybe, huh? 47 cents for long puts. Not a bad position. I am super aggressive selling 22 long puts for $1.04. So the question is, what am I doing? What am I doing? Where am I at? Paid for 20.50 long puts. It cost 47 cents. And now I shorted 22 long puts for $22 for $1.04. So I'm good as long as Under Armour stays bullish. Here's the question. How long will Under Armour stay bullish? There's its chart. Here's where I am basing my thought process on. Little down day after a huge up day. It also couldn't stay above the 22.47 pivot point or past resistance. Now, last time it had earnings, it had a big up day with a nice gap, had a down day, and then we went for 3 up days in a row. In all honesty, since Under Armour did so good at their last earnings, I would have thought that they would have been okay and made, with the China announcement, been okay and made a jump higher on the China announcement. But here's what I think is going to help my trade if I get scared. If I get scared, I've got 3 days of time decay. And really, Monday will be a day off. Tuesday, so I might get 4 days of time decay. Tuesday morning, I might be able to wake up and exit this trade for a break even without a worry of where I'm at. I do have 21 as more of a break even. You could say, well, if I go back up, it's really going to be 20 and a half, right? My break even is at $21.43. So I could let it go all the way down to 21 if I had to, and only risk it losing 43 cents on my position. So where I'm trying to get at, I've made adjustment. I went farther out in time. If you were looking at this and if I was going to get assigned at 22, what else could I do? If I was going to get assigned at $22 on my short puts, what else could I do? Abraham made a comment, creating additional credit with the expectation of going up, so you're paying your previous protection. Lance made a comment. It looks like you're making money on both your bull put and your stock ownership. That is correct. More importantly, though, what else could I do for an adjustment in this trade? There are probably a couple things, but there's something I'm thinking of. Could I sell my stock? Could I sell my 1,100 shares of stock for a profit? So that way I can honor my $22 long puts and just take stock ownership? And couldn't I be more aggressive if it goes ahead and if it runs up to the 24? Couldn't I roll these? I shorted these long puts. That makes no sense at all. Couldn't I also roll these $22 puts? If I can get another dollar credit, run it up to 23. If not, if it looks like it's go to 24, just put it out of the money at 24 for another $2 of credit. In which case, if it gets up there, I'm fine. If it doesn't get up there with my credit and the sale of my stock ownership already, I'd be covered. I'd be covered with a cost basis down around 21, even if I took stock ownership at 24. It's a little bit of thinking outside of the box that was rather interesting for me. I also have a new position. A new position that's a little bit scary. This is my throw it out there position. This is a position I entered this morning that everyone could still enter today. But I put in today a short-term bull call for earnings this afternoon on NVIDIA. NVIDIA pre-announced, they've done everything right. We've already seen this with Apple. Bought to open and it's only 2 contracts. Bought to open a February 22nd of 2019, $155 long call for $5.63. Good thing I'm typing everything in so perfectly. I sold to open a February 22nd, 19, 170 short call for $1.45 of credit, net debit for the trade is equal to 563 minus 145. So it's not too bad in there. 563 minus 145 is equal to $4.18. Net, I'm going to say $840 for the two contracts. Maximum reward is equal to difference in strikes, $15 minus 418 is equal to $11.88, right? So taking a little look at that, 418 divided by 1188, 35. So I've got basically one risk for 3 rewards. In fact, this might be another good one. Let's see if I can't pull this one up. What if I took this one and we do a little bit of analyzing on this one? Maximum profit, 2164. Maximum loss, 836. Break even at 159.18. I've got a 1 risk for 2.59 rewards. A 1 risk for a 2.59 reward. That works for me. I really like this opportunity. But if I'm wrong, it's probably going to go right back down to 135. If I'm wrong, it's down to 135. I'm in trouble. I kind of find it interesting because if you look at a chart on NVIDIA, why I put the positions on, I'm hoping, and I know you shouldn't hope in a trade, right? But plain and simple, let's see if I can get this position the way I want to. Let's just take a picture of this one too, huh? Earnings today, but my chart setup gave me everything I needed to see on NVIDIA. Meaning, looking at this chart, if it drops, I've got support at 145.43. I've got a second level support at a pivot point at 144.11. Kevin, you capped yourself. You capped yourself at 170. Yes, I'm capping myself at the most recent highs. But again, to be able to make $11.18 times 200, I'm okay with a $2,136 profit. I'm good with that. It's a week and a half. Because I've put it at 150, if it breaks my 145, I can short a 145 short call. I'm not sure what that would put me at. I'm not sure how much credit I would get, but I do know all of this credit would disappear. All of that credit would disappear. It'd be gone. And yeah, I'm looking at right now, I am up 10%, which is quite nice. But I'm going for more than that. This is my short-term go for it trade. I do know if I was to take a peek and look at what I might get for a short call position and at the money. So looking at a February 22nd and at the money, it's trading at 154. So here's 155, 152. Couple out of the money. There will be some major bleed off, but I could get between 325, 320 and 405, 325 and 410. I could get almost another $4 of credit if it breaks that 50-day simple moving average. So if this doesn't work the way that I have planned, if it's going to break that 145, you know, last time it broke it, it went down. Last time it broke it, it went down. We might test the 131s. So I could get away with a 145, 140 short call position that might pay off all of my long call. And again, I get a Monday bleed off over the weekend that I don't have to worry about. So kind of an interesting little run I played on NVIDIA. I'm kind of going for it. It's kind of risky, but what I like about it and taking this risky trade, 2.59 rewards, 2.59 rewards for one risk. And I can live with that. Any questions on what I'm looking at or what I'm currently in today? Any questions about what I'm looking at or what I'm currently in today? I totally dig this. One risk for 2.59 rewards. It's not often that you can pull that out. Any questions, guys? So, still have the ability. Where I got in at this morning, you could still get in at a cost of $4.60. And at $4.60, you'd still have the opportunity, 460 minus 15, to make 1004 times 2. You'd make $2,080 minus commissions. But it's all based on earnings on NVIDIA this afternoon. They've already lowered their guidance. It shouldn't be a hard beat. Let's see if NVIDIA can't pop off good earnings and help me make a little, couple $1,000. All right, guys. Hey, if there are no questions, I'm going to get this off to Dave. We're going to try to get this posted this afternoon. It is a February 22nd, 155, 170 bull call on NVIDIA, playing it for literally 7 days. It's a short-term trade, but because of the setup, I have an opportunity to what I believe could be a pretty good expiration play to be in and out of this trade in 7 days. Only having 5 more trading days, not counting today. Questions came up. Question. Nice. All right. Guys, take care. Have a great day. I'm going to run on you. I'm trying to get this posted before the market closes so you can see it. All depends on if I get approval to have it up or not. So you guys take care. Have a wonderful day. It is a February 22nd, 155, 170 bull call. Talk to you guys soon. Look forward to seeing you next Monday evening, even though the markets are closed, for a market recap. And I will talk with you guys Monday at the earliest. Bye-bye.